Cathie Wood was just on TV and she absolutely stunned me. Take a look.
When you think of Tesla now, do you wish you could have owned more over the years? You wish you could have held on to, I mean, it's already such a winner. It's a decisive winner for so much of your benchmarks.
Yes, it's actually the only stock that is in a benchmark, really, in terms of our flagship. Maybe Zoom, there are 10 basis points in the S&P 500. Do we wish? No, we have. We've been criticized for owning too much, actually, and it has been our largest position for the most part for years.
I like Cathie Wood, but how could she possibly say that she does not wish she owned more Tesla stock in the past? The question was not about today. Do you wish you could own more Tesla stock today? No, the question was about the past. I look at ARK Innovation ETF and it is down almost 7% in the last 5 years. Meanwhile, I look at Tesla and it is up 829%. How could you possibly have said that? Actually, I know how and I know why. I think, number one, if you mostly own just Tesla, why should I buy your fund? I can just go buy Tesla stock. What do I need you for, right? So that's number one. Number two, though, is it's a fund. So you can't really own more than 10%. You have to create this perception of a responsible fund manager. No responsible fund manager is supposed to be mostly in one stock because, otherwise it's not really a fund, is it? And so if you can't really change the past because you want to be a fund manager and remain a fund manager, nothing wrong with that, by the way. I like Cathie Wood. But if you can't change it, then why regret it, right? So I do understand her response. But still, her answer absolutely stuns me. I mean, if you asked me, Matt, do you wish that in January, when Tesla stock was down to $100, do you wish you sold all of your real estate and put that into Tesla stock? And now it's basically double. Do you wish you would have done that? I would say, yeah, of course I wish I would have done that. I mean, if it was possible, yeah. I don't really regret it because, it's not realistic to really do that. But Cathie really shocked me with this one. And now let's take a look at her latest thoughts on Investor Day and more about Tesla stock. This one was actually pretty good and entertaining. Let's take a look.
So our conviction remains very high. One of the reasons we do sell as it moves above 10% in the various strategies is that gives us the psychological wherewithal after we've taken profits to buy when it is falling to 100, which it did not too long ago. So that's part of our trading around opportunities that volatility gives us.
And also, this is how, when you completely nail your top favorite position in which you put the most money, you still end up losing money in the last 5 years, while your favorite stock went up 829%. And this is where Cathie Wood has some thoughts about the Investor Day.
And we think it will be about robo-taxis effectively. Elon has said that he believes that he'll be able to cut the price of a car in half. We think that a robo-taxi could start at $25,000, and if you've got tax credits, that to take you into the high teens. It's going to be very difficult for the competition to beat that. In fact, they won't be able to come anywhere near it, given their current battery technology.
There's so much excitement around March 1st. I'm going to try to keep my hopes low for now, but it's hard.
And
so not just the dealer network, not just their marketing costs,
no,
just the battery.
The battery is critical, and Elon's writing down the consumer electronics battery curve. Other automakers chose a different curve that was higher cost to begin with. So they're writing down a curve, but Elon, because he's innovating in battery technology, and we'll hear more about that as well, is we believe 3 to 4 years ahead of the competition, which means for the same power and range, another company, if they wanted to price at the same level as Tesla, will have to lose money, especially if he cuts prices in half.
As Tesla ramps up unless we have a new model coming out really soon, Tesla will probably cut prices again. That's just natural. You're producing a lot more vehicles. Now you need to create more demand. One easy way to do that is to cut prices. But also, when you cut costs, you can pass these to your customers as well. This has been a plan of Elon's all along. Long-time Tesla stock investors were not surprised about price cuts. That eventually had to happen, and it will happen again. The question is not if, but when. The question, for example, is not, will Tesla one day use one-piece casting? It's more about when eventually Tesla will use one-piece casting. When is really the question, and it might be a long time, but I believe eventually it will happen.
Well, so if they're so ahead of competition, why does he have to cut prices?
This is the beauty of innovation. He's following a learning curve.
Did you notice my guy's face? He was like, we got you, Cathie.
Cut prices.
This is the beauty of innovation. He's following a learning curve. There's the drive train is following a learning curve. And for every cumulative doubling in the number of vehicles produced globally, costs decline 28%. So he's passing them along. As you'll notice, as prices have come down, his margins have gone up. He's enjoying economies of scale.
You will definitely have someone saying, oh, but man, look at the automotive gross margin. It is going down. Look, it was at 32.9%. Now it's only 25.9%. Pointing at gross margins is like pointing at a potato field, a field of potatoes in the wild, and saying, go eat these potatoes. Well, you still have to cook them and also take them out of the dirt. So let's get a little bit dirty. If you want to dig into the dirt, you want to look at, for example, operating margin is much better to look at. See here in 2020, Q4, it was just at 5.4%. In Q4 of 2021, it was 14.7%. And in Q4 of 2022, it was 16%. Each number bigger than the previous number. Let's see how this number looks like in Q4 of this year.
And we do believe that margins for Tesla are going to become explosive with autonomous mobility.
Well, that's the other knock against your call, which is the robo-taxi thing hasn't happened. And when it comes to autonomous leadership, Tesla itself last week had to recall hundreds of thousands of vehicles because of their, they recognized the NHTSA safety report that they've been mismarketing their self-driving feature.
So just think about that, recall. So quick over-the-air software update. I mean, that's a lot different, right?
This is so hilarious to watch. As soon as Cathie gives a rebuttal, the host uses the rebuttal as a further knock on Tesla. Cancel your Netflix. Cancel your Hulu. Stop watching TV. Just watch Tesla content. This is much more entertaining.
That's what all the robots that we're driving right now have been doing for the past 5, 6, 7 years, is collecting data so that he will be able to do that. He and Tesla and the broader team. This is not just about Elon, of course. And autonomous is proven out already, not by Tesla yet, but by Cruise Automation, which is GM's subsidiary. And they were able to launch in 90 days what it took them 9 years in San Francisco. They launched in Austin and Arizona within 90 days. As always, in the early days of innovation, it goes slowly until all of a sudden it takes off.
And Cathie believes Tesla will be the #1 company to benefit from full self-driving.
AI is really the mover and shaker here. It is going to catalyze more innovation because it's at the heart of the convergence between and among technologies. So autonomous taxi platforms, and I know Tesla's going to be talking probably a lot more about this now at its March 1 Analyst Day. Autonomous taxi platforms are the convergence of 3 major innovation platforms: robotics, energy storage, and artificial intelligence. Those are 3 different S-curves, and they're going to feed one another.
Although, keep in mind that ARK Invest does not assign any significant value at all to Tesla's energy business. Elon Musk has been saying for years that the energy business could be bigger than the EV business. This is an article from 7 years ago. This one is from 2019 and another one from 2020. And I know it's easy to write that off, and you can even use what I just showed you to say, oh, well, Elon has been saying this for the longest time, therefore it's not here, and it's not going to happen because Elon has been saying this for now 7 years. And even though energy storage deployments increased by 152% year over year in the last quarter, you're going from a small amount to still a small amount, but a tiny little bit bigger than that previously small amount. It's not much of a difference, right? Okay, well, you could have made that same argument back in 2012 and then 2013 and then 2014 about Tesla's deliveries, and look what happened later. I mean, Tesla was still small, right? There's no way that business was going to grow a lot. It was just a quick spurt of growth and it was done, right? And by the way, I did not invest here in Tesla stock. I invested in early 2019 because I thought Tesla was definitely going to be profitable, but there are still concerns. So here you could have made an argument, okay, you're taking a lot of risk, so maybe it is not worth the risk. How could you have seen this coming? But what I believe is happening is the same sort of curve is going to be happening to the energy storage business, except Elon thinks it is going to grow even faster than the vehicle business. And one very important difference that we have to make between this business and the energy storage business, Tesla right now is in an incredibly good financial position. Back then, right here, yeah, you were taking more risk because people thought Tesla was going to go bankrupt. But now we have this exponential growth that we believe is going to happen again, but in the energy storage business. And Tesla is doing great financially, and yet no one cares. Now that, I believe, is an opportunity that even Cathie Wood is missing.
So we think it's going to be pretty explosive. They have proprietary data, including Tesla, like billions upon billions of miles of real-world driving data that nobody else has. Most of our companies are going to be sleepers because of that proprietary data.
I go to Google's Waymo, which is their autonomous driving solution, and they literally say that they have millions of miles on public roads and billions of miles in simulations right here. When I was 4, I was at my auntie's. I go to the kitchen. I see this beautiful apple. I've never seen an apple that tasty before. I grab it. I take a bite out of it. And my teeth almost fall out because that apple was made out of plastic. These billions of miles in simulation are about as useful to full self-driving as that apple was to my stomach. In fact, AI expert James, he said that you have to be extremely careful with simulated data because AI models are pretty good at figuring out, oh, this actually is a simulation, and then you teach it to act in ways that are not really natural, and that may even be counterproductive, meaning the benefits of simulated miles may be as beneficial as that apple was to my teeth. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.